Hello, everyone. Once again, this is Black Forex coming to you with another market analysis currency breakdown. We're going to be examining the USDCAD. But before we get started to break down this chart and this currency pair, we have to state that this video is for educational purposes only. This is not financial advice, but we all know why you guys are here to find good, credible Forex content that can help improve your ability as a trader and to help put some extra money in your pocket, especially in these troubling times, okay? So this is one of those. This is a currency pair that's totally contingent on what is happening with the price of oil, and we're going to dive into that is why. And this is because that the Canadian dollar has a traditional relationship with oil, okay, and that the U.S. dollar has developed a non-traditional relationship with oil that is solely due to the current geopolitical climate that is currently happening in Europe between Russia and Ukraine. So we'll get into both aspects of this. So since the beginning of the year, the CAD has been kind of lukewarm or right there in the middle, where it's been right there in the middle, where just as much negative news and positive news is all coming out about the same amount, the same rate. But what really pushes it over from weak to strong is the price of oil. Okay, the price of gas, because one of the major exporters of Canada is oil. Okay, so if if the oil goes up, then the Canadian dollar value goes up. If the price of oil goes down, then the Canadian dollar value goes down. Okay, so that's what's happening with that. We've been getting a lot of mixed oil news. So we did get some news that showed that it was increased circulating barrels of oil in the world, which technically would bring down the oil price because that means that there's more circulating volume of oil out there. But then we got some other news saying that the oil is not doing too well, and based on which is currently happening with the economy, we have to go with that the oil is not doing well from a price standpoint. I mean, I'm not saying doing well; it's actually doing marvelous from a price standpoint, but it's not doing well for us as consumers that use gas. So oil is still going up slowly but surely, which means that we're going to start to see a weakening U.S. dollar. Okay, because as continues to go up, we're going to see a weakening U.S. dollar. And this is solely due to the fact that if people are spending more money at the pumps, they're spending less money at the stores. And if they're spending less money at the stores, that means that our economy will start to actually shrink or stagnate. Okay, because there's no money going into the economy. But if people are spending less money at the pumps and more money at the stores, that means that we're going to continue. That means we're going to get have a better economy for the U.S. Okay. Also, we had the CPI numbers come out about the USD and American economy, and we're still dealing with crazy 40-year inflations. Does not look like it's going further, but it does not look like it's plateauing out. So we're actually in a position where we could actually start to see a gradual weakening of the U.S. dollar and give up some of the gains that we've been gaining over the past several trading weeks. Okay. And with that being said, let's now break down what's happening on the chart. That makes it prime for retracement. And how far can it retrace? It can retrace as far as here, here, or even here before we start to see any type of move. So once the retracement comes in, then we will be able to know whether this is retracement or price turnover. The way we would know that is that if we start having big red candles coming in and choppy, crappy green ones going up, then we could safe to say that it is price turnover. Okay. But if we have choppy red candles bringing price down and we have big green candles going back up, then it's safe to say that the buyers have not left the building and the buyers have not left the building and they're still planning on long-term buying with this currency pair. Okay. So we have to consider the retracement and then what happens with the next move, because the next move is really going to give us the overall trajectory of what's going to be happening on the chart. Okay. Now, if you guys like our content, we invite you to please subscribe to our YouTube channel. Subscribing to our YouTube channel will allow you to get up-to-date notifications and updates on every time we drop new trading content. Also, we ask that you guys please like and share our videos. Liking and sharing our videos will allow our content to get pushed further out there in YouTube so we can continue to grow our community of profitable traders, because our goal is to grow a community of profitable traders. Okay. And last but not least, we ask that you guys please reach out to us and let us know what market analysis videos that you guys want to see. We'll do stocks, we'll do crypto, we'll do futures, we'll do other forex pairs. Any charts we are willing to break down. Only thing that we ask is that you guys do please reach out to us. You can reach out to us by either leaving a comment, whatever video that you do watch, or what you can do is reach out to us through our email or through our social medias. The links to our email and the social medias in the description of every video. Okay, and with that said, happy trading.